All right, trading family, you absolute maniacs. Grab your coffee, grab your conviction. Wildcard here, Monday, July 6th, and the tape is screaming confusion before the opening bell even thinks about ringing. Q's down 1.8%. Semis are a bloodbath, but the Dow is green and the S&P is basically flat. That's the whole morning in one number. I'm here with the only voice that keeps me from trading on vibes. TB. What is the first thing your numbers are telling you?
Quick disclaimer. We're two guys who stare at charts way too early. Nothing we say is financial advice. Do your own homework before you commit a single dollar. That said, futures are exactly where they closed Friday. S&P flat, Dow up a handful, VIX at 16.4, creeping, not panicking, but the most important signal. Oil overnight didn't move. Strait of Hormuz threats came back, NATO chatter ramped, and crude sat there like it was Sunday afternoon. That non-reaction is the real starting point for today.
Bro, that oil non-event is the loudest thing on my screen. Friday's week payrolls had everybody popping champagne. Rate hikes are done, soft landing is back, gold jumps, copper rallies. Then I crack open the terminal this morning, and Bloomberg's lead shoves. Trump's war means higher global interest rates for years, right in my face. That's two completely opposite futures trying to price in at the same time. And oil, the actual supply risk asset, is telling both sides to sit down.
Exactly. If the Strait of Hormuz can't push crude higher on a Sunday night session, the market's essentially pricing war as noise. That undercuts the higher rates for years thesis because it depends on sustained war risk flowing through commodity prices into inflation. You can't have structural yields rising if the commodity impulse is dead. But here's the complication. Gold is at $4,160 holding the 2-week high, and it works in either scenario. Low rates, gold rallies. War escalates, gold rallies. It's the only asset that doesn't have to choose sides, which tells you the market is hedging, not committing.
That's the asymmetry you flagged before we went live. 1 week payroll print is a chair, and the structural higher for years argument is concrete. Gold is the mall security guard. Doesn't care who's right, just collects a check either way. And that's why the rotation is so real. Money isn't leaving the market. It's leaving the growth names that get wrecked if the concrete thesis wins. Healthcare up 5% last week. Financials up 4%. Semis down over 2%. The bid is alive. It just walked out of tech and into defense.
And right now, the most dangerous spot to stand is semiconductors, because the binary is sitting right on top of us. KOSPI has seen foreign selling for 11 straight days into Samsung earnings tomorrow. Samsung is the memory kingpin, and Micron is the U.S. proxy that's been absolutely clubbed, down from $1,155 to $974, losing 13%. If Samsung misses tomorrow morning, that selling doesn't pause, it accelerates, and Micron likely breaks through $950. If Samsung crushes, the exhaustion finally shows, and we get a sharp relief bounce. Same trade, 2 tickers.
And I want to park on that because I know the wave trader algo is carrying Micron right now. I saw the entry at 1155 and you're sitting at 974. How are you managing that? Not just the position, but the mental side of wading into one single coin flip.
The wave trader algo screened 286 signals last week and approved 0. It's doing exactly what it was designed to do. Sit still when the tape is too contradictory. The Micron position is a hold, not an add. I'm not hiding from the drawdown. My gut book is small and patient, and I'm not layering into pain just to feel active. If Samsung misses and we crack 950, the stop loss fires and the algorithm moves on. But I'm not front-running that outcome. The system doesn't pre-trade its own stop. It stays mechanical. And that's the only thing keeping me from getting emotional right now.
I respect that. My TFT algo is flat cash, $9,891, and it hasn't twitched because there's no edge in a coin flip. My paper account is the same. I almost chased the energy sector. ETF bounced this morning. Chevron up 2%. Oxy up 2%. But if the Strait of Hormuz can't push oil up in the dark session, I don't trust the rebound. I'd rather sit out and let tomorrow's Samsung print and ISM services resolve. I'm passing today.
Smart. And we should loop in the earnings calendar because honestly, this week is a one-print show. Samsung reports tomorrow, Tuesday, July 7th. Nothing else on the U.S. large-cap docket matters. If you're in tech, this single release dictates the next leg for the entire semiconductor space. For NVIDIA, for the SOX index, for all the leveraged semi-products. Everything else is secondary.
That's clean. Tomorrow's the whole ballgame for semis. Moving to what else could tilt the table this week. The economic calendar. TB. Walk us through the high-impact data that could validate or gut the soft landing camp, because ISM Services is a massive domestic hinge.
Tuesday, same day as Samsung, we get ISM non-manufacturing, PMI, consensus 54.2, previous 54.5. The sub-indices are where the real story is. Prices paid, previous 71.3. Employment, previous 47.9. New orders, previous 57.3. A hot print, especially if prices tick up, kills the no hike narrative that gold's been riding. A soft print, maybe employment dipping further, accelerates the rotation out of tech because it confirms the economy is cooling. That same morning, ECB President Lagarde speaks, and her tone matters for the dollar. Hawkish leans weaken the dollar and give gold another bid. Dovish strengthens the dollar and could make Kospi's foreign selling problem even worse.
So Tuesday is the domestic hinge. And then Thursday we shift to China's read, CP. I consensus 1.1%, prior 1.2, and PP. I'm moving up to 4.2 from 3.9. That's input side pressure, which matters for commodity names and for the China reopens narrative that's been carrying some of those beaten down material stocks. Japan, PI on Friday rounds it out, but the real action is Tuesday. The whole week orbits around one morning.
Exactly. Sector rotation squares with that defensiveness. Looking at the 1 week board, healthcare XLV plus 5.21%, financials, the financial sector plus 4.06%, communication services, XLC plus 3.81% leading, laggards, utilities, XLU minus 0.2, energy, the energy sector, ETF minus 1.61, and technology, the tech sector minus 2.16. The money is flowing into groups that work if growth slows, healthcare and financials, and it's abandoning the growth engine. Energy's weakness, again, echoes the fact the war premium isn't showing up, reinforcing our contradiction story.
And international flows are humming the same tune. Overnight, Asia was quiet, but Kospi dropped another 0.5%. 11th day of foreign selling into that Samsung event, Hang Seng up over 1%. So it's not a broad Asia panic, it's specifically Korea semis bleeding. Europe, DAX up 0.25%, FTC up 1/3, nothing cracked. On the FX side, dollar index up 0.25%, dollar yen up 0.5%. The yen carry trade isn't unwinding, no immediate Japan stress, so the global piping isn't flashing danger. But Kospi's slide is a direct pipeline to our semiconductor pain here.
That's the thread that ties everything into our books. The whole week is a single bet. Does Samsung validate the tech route or break it? The rotation into defensives means money is already preparing for slower growth, but it's not exiting entirely. If Samsung misses, the semi-free fall could spill over and lift VIX above 18, maybe 20, and then the rotation becomes a genuine risk-off event. Bull case, Samsung beats, semis are deeply oversold, Micron snaps back above 1,000, and this whole 2-week correction gets labeled a head fake. Bear case, a miss drags the whole socks, defensive flows become stampede, and my Micron position tests the 950 floor.
And the second-order effects of this binary are already visible in the soft commodity space. Bloomberg ran a piece saying food prices fell because focus switched from war to harvests. But those harvests are literally on fire right now. Wildfires in Portugal, Greece, Spain, olive oil, citrus, wine grapes, those supply chains are getting torched. The market hasn't priced it yet because everyone's staring at semis. But if this summer's heat keeps incinerating crops, that's a genuine supply shock nobody's talking about. It's not a day one trade, but it's a slow burn tailwind for softs.
Worth watching, absolutely. Harvest optimism is fragile. For our books, though, the name touching everything is Micron, with the stop at 950. And we're sitting entirely on hands until Samsung and ISM resolve. WC's gut call account is cash. My wave trader algo filtered out everything, and I'm not forcing a position just to have one. Sometimes the best trade is being able to act tomorrow when the fog clears.
And that's the close. Here's what we're watching tomorrow. Samsung earnings print, the bellwether for the entire semiconductor sector. ISM Services consensus 54.2. If it's hot, the dovish gold thesis dies. If it's soft, rotation accelerates. Lagarde's tone on the dollar gold axis. Concrete levels. Micron 950 is the bear trigger. 1000 is the bull relief valve. VIX 18, March where risk off gets real. Gold breaking 4,200 would be the next upside breakout. Until tomorrow, stay safe, stay sharp, and don't let the tape shake you out of a good plan. Wildcard, TB, we're out.